Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, I think we're in for another really slow day. Hold on, wait, what's some music here? I think we're in for another slow day. Probably not as bad as yesterday, though. So that's good. Hold on, I'm still like, there's still some stuff starting up here. Oh no, okay, we're good. We're good. To the charts. So here's the Treasury. Yesterday, man, I missed all the fun yesterday. I hope you guys had fun without me, because it was like literally as soon as I left early yesterday, and literally as soon as I left, Treasuries puked, equities, they took a dive. It was, but man, I'm not going to say that it was like the craziest move, but it was pretty ugly. And by the way, that takes us like below the November lows. In fact, now I have to come back over here to this one to really get it. So you can kind of see like they are making a significant breach below some longer term support levels here today. So we're in an interesting spot, although volatility is still only listed 4.95 today. So the market is still not pricing in like anything crazy. Okay, oil. Well, oil took a dive yesterday. The overnight, they just seem to be stabilized. A little jump in gold and silver. Copper. Copper took a dive with the rest of the market. And what about the Japanese yen? The Japanese yen is selling again. I don't know. Would the yen be selling would be beneficial to that trade right now? I don't know. I get a little crossed up sometimes. And Bitcoin? Okay, Bitcoin's still just kind of there, huh? Well, so this could be really interesting. This is Tuesday. And let's see here. Let's come back. Yeah, we don't have any. Well, we do have a 10-year auction today. So that does keep it interesting. But it probably is still going to be really tight. Make sure that we got our new squawk listed here. Oh. I'm reading now a thing from YouTube. I guess they have a couple new features. Comment reply suggestions launched globally. AI enhanced comment reply suggestions are now available to all creators. This feature provides suggestions in the style and tone of the creator's channel to help make it easier for you to respond to comments from your audience. Are you kidding me? This is YouTube. This is possibly the dumbest idea you've ever had. Like, the whole point is that it's a real person that you're talking to. And now you're giving them a tool so that maybe if you get a reply from your favorite creator, You don't really know. Maybe it was just AI. Like, that is so dumb. I will not be using that. Featured places in Shorts update. We're adding featured places to Shorts, which uses both creator tagged and auto tagged locations to highlight key places in the description of your short. This will help your content get discovered by viewers searching for shorts about a specific location. Oh, I see. You can just opt out of auto tagged locations in Studio. Live streaming. Stream in both horizontal and vertical formats. We're rolling out a setting that allows creators to go live in both horizontal and vertical formats at the same time. Turning on the setting creates a vertical crop of a horizontal live stream that shows up in the Shorts feed on the YouTube mobile app. This update will gradually roll out to all creators in the next few weeks with more cropping options and third-party encoder compatibility for vertical layouts to come as future updates. Oh, okay. So I turned that on. We'll see if we get anybody doing it on the vertical format. But probably the crops is gonna suck, and they will have other features to help us with that later. Okay. Yeah, it's terrible of YouTube to add more AI crap as people are literally begging them to stop and remove AI crap. Yeah. Oh, dude, every once in a while, it is kind of fun to like see AI stuff, right? But as it is right now, I do not want to see AI and real stuff together. Like I want to know if it's real or AI generated. And I don't want to have to double check on every video, Like I should only get AI stuff if I go to the AI feed or something like that. I don't know. It's crazy. Like, it's funny that YouTube is doing this after, what we were talking about yesterday, that there seems to be a renewed desire for authenticity from audiences. Okay, that's interesting. That was a pretty big buy there at 11.5. I'm thinking, well, so it's going to be relatively tight, and we do have an auction today, so that can kind of help. I do wonder if maybe there will be good demand at the auction, because you're getting a pretty good rate, relatively speaking. And honestly, I am not convinced that the pricing for the treasuries is really that reasonable. Like, I don't know how you guys tell me how you feel, but I feel like that there are still some concerning things in the economy. I think that that longer term unemployment rate is still really high. I think that hiring between all of the summer tariff stuff and the government shutdown was practically nil. And then on top of that, we had a lot of cuts in government. So a lot of people are out of work because of government. And there are a lot of companies set to, there's another big one, a lot of companies set to do layoffs. I saw one survey that said something like 30% of companies were planning layoffs. I really think we're going to see a spike in layoffs after the holidays. Not saying that that's the end of the world, but it will be an unusually high amount of layoffs. And then at that point, we're kind of have to see if the economy can handle and absorb all of that and normalize, or if things are going to fall apart. And if interest rates get too high, well, right now we're at 4.16. That's not terrible. Okay, I would like to see it below 4, but at some point, the rates get too high. It's a really big problem for a lot of different things. So I'm just not convinced that the the rates can get too much higher from here. But clearly there are major players in the markets, and from every time that I see like Gunlock, Jeffrey Gunlock is a really good example. You go and you look at what they say, and they're expecting rates to get a little bit higher from here, for instance, right? They are more in on the idea that interest rates need to go up to deal with slightly above target inflation. But I feel like that could be like an institutional bias. Like those guys are going to want the interest rates to be a certain thing, because in a situation like that, who loses the most, right? It's going to be those fixed income guys. If inflation is too high and we're reducing rates at the same time, right, then that's going to really hurt fixed income bondholders, et cetera, because the inflation eats away their profits. So they want the rates to be high enough to counteract the inflation. And if they're not, because we decide we're going to tackle employment instead, they're screwed. And so they're going to be prone to think that the rates matter more. When I really think, from the position of the Federal Reserve at least, that they're going to continue to cut. I think they're going to cut now, and I think that then it'll probably be like, leave it alone for a little while, and then they do more cuts later next year, perhaps. Like we need to get the interest rates back to like a neutral level. And the thing is like the inflation that I'm seeing is not like there's too much money in the in the money supply. It's things like tariffs and leftovers still kind of normalizing from the 2022 inflation, and certain measures being lagged, like the housing component of CPI. I think that's mostly where it's coming from. So, But we had 2, maybe 3 big block buys through there. I think that we're probably going to, they're probably going to taper it off here. And maybe we will get another leg later. But I think that there might be, people might have a good reason to make a big buy here. Might be part of it. At the same time, I don't really see it going much further than 15, if it goes. But let's keep a close eye on it. Yesterday, first day of the new job, so we ended the stream a little bit early. Today, we will go until 10 o'clock Eastern Time. I don't have any news, but we'll go until 10 o'clock Eastern Time. Or the Federal Reserve meeting, y'all's on your own. It'll be fun. So here's the tips for the Fed meeting. It is widely anticipated now that they will cut. The big question, especially for the initial release, will be how many dissents will there be? The Federal Reserve does very much have a culture of consensus. So I think that if you do see dissents, that it's probably going to be like last time. You have one person say that we should be hiking, and there'd be one person that will say we should be cutting, or whatever it is, right? Or so one person that will say we should have cut 50 basis points, and one person that will say we should have kept rates where they are. Okay, but I think that because of the consensus culture, they will, and I think that like one dissent would probably be, I haven't seen any listed stuff like this, but But if there was a consensus expectation, that's probably where I would put it at. Anything beyond that, though, would be a surprise. So on the release, that's the big thing you're going to be watching for. Okay. The second thing that we're watching for is that there is speculation, especially from some of the repo market guys, that the Federal Reserve may actually start like essentially asset purchases in the repo market. Like that not only like did they stop it, but that they're going to have to turn around and provide some support to that market. Okay. So, this is like something that like the analysts are just kind of predicting, and it's like one or two. So it's not necessarily like, I don't know how widely expected that is amongst Wall Street, but especially if they said something about that in the meeting notes, or I mean the statement, that would probably also, you know, that could be a dovish reaction from that. But I think overall, the most likely thing that you're going to see happen is you're going to get a hawkish cut, which is to say they're going to cut interest rates. The market already kind of front ran that. And now the market goes, yeah, but you're not going to cut anymore, or you're going to hike in the future, or yada, yada, yada. Right. And Powell will probably come into the presser and probably give a similar tone to what he did last time, what he did in October, you know, which was hawkish and hit markets, right? So I think part of what's going on in the treasuries is maybe people positioning for that. I don't know. Well, I don't know. I feel like it would, for the day of, it would maybe be too early to be positioning for that, because it might move too far. But don't be surprised if he cuts and then interest rates are higher by the end of the day. Okay. And once that's passed, then maybe the market kind of has an opportunity to just see where it goes based on the natural supply and demand, and not as much based on speculation. Okay. And in that case, I think you probably do see some of this downside revert a little bit. That's kind of my thinking overall. But again, that is largely because I still think that there are some real concerns in the economy. And, you know, if we get into January and February, that's when we might start to see that actually it is really bad and it was not just like a one-off thing. So, man, I tell you what, like, starting a new job, I feel like it's already been a whole week. I feel like yesterday was like 5 days. You know, when I did the contract job, you know, that was just like, okay, here's the laptop, go get it, you know? And I just, you know, started getting permissions for everything and started changing things, you know, and I knew exactly what I wanted to do, right? But at a full-time corporate job, you know, you got to go through all of the HR stuff, and, you know, it's like a whole thing. And it's kind of funny how it works, because like, well, I'm fine. I enjoy it. Like, the whole thing is just like, it's an experience, and you just get really present and in the moment, and I really enjoy it. But I could see, I think a lot of people would feel really overwhelmed, you know? I think most people do feel overwhelmed. So it's like, they give you all of this information at the beginning to help ease the transition into a new job, right? And I feel like that all they do is they just shove so much information at you all at once that it just overwhelms most people. Oh, so you know what the other thing that's interesting about this job? Oh my gosh, guys, it is so weird, almost creepy. I feel like I'm on the Truman Show, you know, because the layout of this new office is almost exactly the same as the layout at Goldman Sachs when I worked for Goldman. Like, just, man, everything about it, from like the way they've got like the air vents. You got an aisle and there's like an air vent down the aisle. It pushes the air down so that like it stays quiet and the sound doesn't lead off into other rows when you're talking. But to like where the bathrooms are and like the shape of the office and the type of windows that they have and like the whole thing. It really feels like that they just like they took the old Goldman Sachs set and just kind of updated it for 2025. And you know, unlike it's not real. It's so weird. So it feels too familiar. It feels too familiar. It's the weirdest thing. But kind of feels like home. Like I feel like to some extent that I've felt so much like a nomad a lot, you know? So the office seeming familiar, that's very comforting to me. But you know what happened? Oh my gosh. I should have expected this. I should have expected this. But so here's what happened. They gave me a Mac. Can you believe that? They gave me a Mac. I'm like sitting here thinking about it. I was like, it's going to be a Lenovo? No. It's a MacBook. Which I'm not complaining. A MacBook is a great machine. And it'll be fun. But I have not used an Apple computer for like 20 years at this point. So it's been a journey. It's been a journey. We're to see. I'm going to take that docking station that Wavelength gave me and see if I can convince them to give me 4 displays. We'll see what happens. So they did come back at least 1 tick. So I was pretty good at feeling, you know, that is just pace. That's all entirely about pace. That is just like, I kind of see they've made the move. I can kind of see the things happening. I don't see like a super clear liquidity hole happening, but it definitely feels like that the people that were pushing it have backed off. So question though is, if we get another move up, are they gonna give it, you know, is it gonna give too much back before it does that? I think this is gonna be a really difficult second leg to catch if it goes for second leg. I don't think I think from a speculation perspective, I could maybe justify a trade, but I really don't feel like I have enough information in terms of balance of flows to really have a solid trade. I'm really just guessing here that there will be some people wanting to buy the treasuries at these prices. So I feel like this is way more speculative than usual. Let's see here. Let's check a few things here. Everything looks good over here. Make sure you click that like button. Something we've been... How come it doesn't show me? I hate that it's... Oh, there we go. Only 1 like so far? Oh, we gotta do better than that. I trust you guys. You'll have, by the end of this stream, we'll have a 12 likes. It'll be great. Iceberg at 12.5. Which I do believe, let me go back here. Yes, 12.5 was where we saw some of those first the big one. Although I think that the big one was at 11.5. Wasn't it? Yeah, it was at 11.5. The change in cumulative delta on that move too wasn't huge. Did we see? Well, we did see the S&P 500 take a bit of a dive. Maybe I should be digging a little bit here. Did maybe something happen in the equity market? Oh boy. Bipartisan group of House members led by Representative Fitzpatrick introducing a healthcare bill today with a 2-year extension of enhanced ACA subsidies. Let's check this out. Ooh, they've got like a PDF. Their little reader thing is not working very well. I'm going to have to download it. Extension and modification of enhanced premium tax credits for 2 years. Guardrails to prevent fraud and exchanges. Extending annual open enrollment period for exchanges for plan year 2026. Modernizing and ensuring PBM accountability. What's that? A ban of spread pricing in Medicaid, transitioning to a transparent semi-reimbursement model that ensures fair payment to pharmacies. Reform of Medicare Part D by delinking PBM compensation from drug prices. Okay, so this is kind of like a very specific change on one thing. Full rebate pass-through plan, exception for innocent plan fiduciaries. This section from the previously vetted and negotiated December 2024 continuing resolution pass through 100% of rebates and discounts to health plans / employers. Oh, okay, so just because we have a rebate, it cannot be like that the healthcare company just makes the money. Everything that you get subsidized has to go back to them. But I don't think option to prepay annual premium. So I don't think that this includes any of the things, though, that Trump and the GOP have kind of been talking about lately. So I'm kind of thinking this one might be dead on arrival, but let's see. We haven't heard anything yet. We've just heard that it's happening. But we'll probably hear them start talking about it. How is the new job? Oh, I was just talking about that a little bit, but you know, the first day is mostly just like HR stuff. So I haven't been able to dig too much into it, but they gave me a Mac. So I've got lots of, you know, like it's just so much work. A new operating system and everything. You got to rice the operating system up and all of those sorts of things. It takes some time. I'm gonna have to learn a couple of things and get like my whole setup so I can be really efficient with it and everything. It's gonna take a bit. It's gonna take a bit. But overall, I'm very happy. The thing about this company, and you know, it's kind of funny because I think I just kind of, I keep lucking out on lots of different things, right? Like I did that contract job. I always kind of expected that it was just going to be a contract job, even though they said that they wanted to hire me. But I just knew that they couldn't really afford it. And so I saved up a ton. And then, you know, because I was all like hunkered down for the long haul. And then I had like 2 jobs that I was looking at. and one of them offered, and it just happened to be a company that has like the best benefits and everything you'll find in Utah. So it's really nice. And they have catered lunch every day. I don't have to take lunch. Which just the fact that I don't have to think about it and like pack it like, oh man, today I've got to give my, leave the stream a little bit early because I didn't pack my, no, all I have to do is grab my bag, put my shoes on and go. It's good. The only downside of the new job is it is still 45 minutes away. So we've got to convince the family to move to Utah Valley is what we got to do. They don't want to do it. They're all, they got their friends. You know what's something that drives me crazy about this is like, I think a lot of it is just that my wife is more of the don't change things type, right? Like that's her, what do you say? What's the psychological trait that we call this? Just like openness, right? She's not. I'm pretty high, especially for my area and everything. I'm really high in that trait, and she is not. She is not, and the kids are not. The kids are. They're like, you give them some food that they've never had before, or you change one thing about it, and you get protests. All of them, and they're all in denial about it too. But they're all picky eaters, even mom. And so a move would be very difficult to convince, right? And they're like, oh, I've got all these things going here and I don't want to leave. And I'm like, wait, what are you talking about? Like, all you do is complain about other people. Like, this sounds like a great opportunity to go and meet new people that maybe you like more. Oh, I don't know. Maybe not, because it is Utah Valley. Although I don't know. Like where I live is super, super conservative and like 80% Mormon, probably even more higher percentage Mormon than in Utah Valley. But in Utah Valley, they also have like that BYU culture in there too, which we are not. Still, if I could move to be like 15 minutes away from the job, that would be huge. That would be a big difference for me. And then you know, because you might not stay somewhere forever. Those sorts of things can happen. I think I'm going to be there for a really long time, but you never know what's going to happen. But even if something changed, most of the jobs in my expertise are down there. So it really does make more sense at this point to move down there. But if we move, it might be something that doesn't happen for like 2 years, you know? Like if we get a recession, like if next year there's a recession and, you know, nothing happens with the business I'm working for right now, and the Federal Reserve brings interest rates back down to zero, then we're absolutely moving. And I will drag them kicking and screaming. Because it would just make too much business sense. But I also, another thing I want to do if I do move, is try to get my parents to come. Because, well, they're going to be going on a mission. So, and then at some point they're going to sell the house to my brother. So at that point, I think it would make sense to have a house that has like a in-law apartment sort of a thing going. Because I really don't want them to live in an old folks home. I really don't want that. So I would rather them live here and have, you know, pay somebody to come and visit them than to have them live in that. I think that could work well. So I would want to try and convince them to come too. But we'll see what happens. It's funny sitting here because I'm just like, yeah, I want to get into the. On one hand, it's really exhausting, like absorbing so much new stuff. Man, I tell you something. Consciously managing your, I don't want. I guess I can just call it energy levels. I guess it's energy. It's like you're not running or anything. I don't feel mentally exhausted, but like that much new stuff going on, it just depletes things. You can only handle so much at a time. And so there's definitely something where it's like your new job and there's so many new things going on there, you kind of have to hold back in other places a little bit. And that is something that early on in my trading career, I didn't think about, it didn't realize. And I made a lot of really, really terrible trades at really terrible times because of that. I would be like especially around workouts, like you get to the end of a cycle where you're really gearing up for the competition and you're really, really taxing your nervous system. And when that happens, because your nervous system is kind of recovering from a really heavy workout, you will have the tendency to be more impulsive with your decision making. And that's where some of the worst tilts have happened. Some of the worst tilts. And then you're in a bad mood during it, for the other. So it affects both sides, right? You take crappy trades and then you're not your best for the other thing because you're in a bad mood, right? So I've learned, I mean, we'll take a trade this week, right? But like, if I take a trade today, on this possible second leg, and it doesn't work, I'm not gonna like try it multiple times or anything, right? It was just like, oh, maybe we'll lose $5 and then be done with it, right? Let's see here. What's Brannigan Barrett hit saying? Bond yields have moved sideways in the last 3 months until the start of December. What changed? Well, rate pricing priced out the December with Powell November FOMC, but Williams put that back in play, so can't say it was rates. The only other conclusion is that the macro data is starting to reaccelerate, and markets are wanting the Fed to loosen policy again. Effectively, yields pushing higher suggests policy is becoming accommodative relative to the macro backdrop. One thing to watch closely at the FOMC this week is how bonds react to a Powell who potentially keeps more moderate cuts on the table. Should Chairman Powell not open the door to a pause in the cycle again, I suspect bond yields will continue to push higher into 2026. Bonds always know something changed in the last. I don't know about that. They don't always know. The bond market definitely has this ability to like sniff something out. That like if something's going on, they seem to price it in before it actually happens. And yeah, especially I can't tell you how many times it's been where like the day before and the day of the FOMC meeting, you get this really strong trend in the treasuries and it's like, what the heck is going on? And then you have the meeting comes out in a certain way and you're like super surprised by like what's in the press conference or anything, almost as though somebody leaked what was actually happening in the meeting, right? That I've used to see that a lot. Not as much lately, but especially like 2017, early in my career. That happened a lot. But I have also countless times, I mean, literally basically all the time, where, I'm seeing the treasuries make a move that's, like a really strong trend in one direction. And it's like, nah, this is not in line with like the economy and what the Federal Reserve is going to do, and get down. Like 2022 is probably the best example there, where we knew that inflation was already high and it was getting worse, and that the Federal Reserve was going to have to dramatically increase rates. And, you know, like all through the winter, the fall and winter, treasuries were up. Everybody was like, nah, they can't. You know, all the retail traders were like, nah, they can't. They can't raise interest rates because then the government would be screwed. It'll destroy the government debt. So they can't raise interest rates. And then what do you know? January comes along and it was just sell. That was a situation where you could see it. The market pricing was way off. You probably, you know, we were saying it's going to come back, and it did. And there was some really, really good opportunities that January. So sometimes the treasury market is just crazy off. And the question really, really is, what is driving the most recent flows? Are the most recent flows more speculative or positioning on like that the economy is looking strong? Or is it other things? I kind of think that a major factor right now probably has to be the carry trade with the Japanese yen falling apart. I really think they are selling their treasuries and bringing the money back to Japan to pay off the loans because the gap decreased. Let's see here. By the way, we were... The lowest we got was 12. So I think we probably could have gotten a fill at 12. They've ticked up. I don't know if that's... I don't think that they're probably ready to go yet. But... it's been 20 minutes. I kind of think, though, that if they make a move, it'll be after the open. Let's see. What's this? First Squawk says Fed may cut rates and boost bill purchases. Yeah, that's what I was saying earlier. But maybe they'll go, oh, why did my voice news get disconnected? Financial juice? Huh? Fed is expected to cut rates to 3.5 to 3.75 Wednesday. Bank of America predicts an extra move, $45 billion in monthly short-term treasury bill purchases to maintain bank reserves and prevent liquidity issues. Combined with mortgage-backed security reinvestments, total bill purchases could reach $60 billion a month. These reserve management purchases aren't QE. They aim to keep money markets functioning, not stimulate lending. While critics may see it as money printing, the move could reassure markets amid rising treasury issuance and concerns about tightening liquidity. Yes. Well, the issue there is that the long end of the curve has not been responding to those things. Today, Nassim Taleb is arguing with people about zone 1 versus zone 3 sort of things on us in a study. And he's really they're really going back and forth about, you know, their interpretation of the paper. It's just kind of funny to see, like, Nassim Taleb is a very combative person on Twitter. He really is. I get it. I know how you feel, Nassim. Wait, what's this from Nick Timmeros? Politico. Is it a litmus test that the new chair lower interest rates immediately? Trump, yes. And then he links to a Politico article. Let's read. Politico's transcript with Trump. Oh boy, yeah. Let's find that. I want to ask about interest rates because a lot of Americans agree with you that they're too high. You're going to pick a new Fed chair soon. Is it a litmus test that the new chair lower interest rates immediately? Trump, yes. Well, this guy too should too, but I think he's a combination of not a smart person and doesn't like Trump, but the reason he doesn't like Trump. So you've spoken with your potential. Well, the reason he doesn't like Trump is because I hit him hard because he's doing a bad job. Interest rates, and then Bernstein interrupts again. So you've talked about your talk to your potential candidates. We're fighting through interest rates. Look, he's a negative, but this country is doing so well. Again, we have 18 trillion. So he's just kind of ignoring him and talking what he wants to talk about. That's funny. Again, we have 18 trillion being invested. Car companies are moving back. That left us years ago. AI is coming in at levels never seen before. Factories are opening up all over the country. 18 trillion of investment in the United States. Again, with Biden, we would have lost 10 trillion. Okay, 18, that's record. You know what's the second record? China. China had 2 trillion. That's a lot. 2 trillion. We have 18 trillion. And that ultimately, you know what it reduces itself to? Jobs. You're going to have jobs like you've never seen in the United States. And prices are coming down. Just, you talk about affordability. The Democrats have to say affordability, but then they never talk about it. They're the ones that gave us the high prices. I'm the one that's bringing them back down. And then they move on to healthcare. What I want on healthcare is very simple. Obamacare was set up for insurance companies to become rich. Okay, that was why they, in my opinion, think the Democrats did it for that reason. Do you know that the insurance company stocks have gone up 16, 17, 1800% over a short period of time? They've been paid trillions, not billions, trillions of dollars. And what I'm saying is very simple. I don't want to pay them anything. No money for the insurance companies. Sorry, fellas. I know them all. No money for the insurance companies. I want to pay the money directly to the people and let the people get their healthcare, their own healthcare. Yeah, then they get it from the insurance companies. I really hate this thing. Like, I tell you, one of the things when we're talking about these like higher level economic kind of issues, I really think that it helps to think of the economy as you know, like a big waterworks, and there's different buckets where those are different sections of the economy where you've got water. And the whole thing is, where does the water go to? You know? And if you've got this huge bucket, you know, and you've got this place over here, which is healthcare, and you say, this bucket is too big. There's too much water in this bucket. We want some of that water to be in the rest of our waterworks. And so you say, I'm going to make this other bucket, which is consumers, and I'm going to put the water into the consumer bucket, but then all of the water but then there's a hole in that, and it just goes over to this insurance company bucket, then you really haven't changed anything, right? Like, yeah, it's going through the consumers, but who actually ends up with the wealth in the end? It's still the insurance company. Nothing changes. And it's just the most... So it's the same thing with like the stimulus checks during COVID. It's like, yeah, you're giving people money, but they're going to give all that money to Walmart. I saved it. I saved it all. If Trump, I think it's just kind of a cynical play, political play to like have a stimulus check next year that he's pushing that I really think is like, he's doing it to get people to vote for him. But if they do it, if it's actually serious and it happens, we'll put every cent into the market. I noticed on your ZN DOM, under the alert column, you have open 3 times. Oh, yeah. So the new version of Jigsaw, I think, is better at coming in and marking those levels. So I think it's over here, load data levels. Yeah. Oh, maybe not. I mean, I don't have them set. I cannot have them turned on, but you can turn that on, and it's just setting them, and then I never clear it. So maybe we are coming into an area where I set a few things, but I don't use the alert column nearly as much as I used to be honest. So, I'm not really feeling it. I would still think I want to wait until after the open, but 12.5 is probably the best we're gonna get if I wanted to buy it. They could still make a run at 15. Kamala Harris, one of the most disliked and least consequential vice presidents in history, usurped her. You know what? I know how to say that word. How come I'm having a usurped her boss and duly nominated Democratic candidate before losing the election in spectacular fashion? Gavin Newsom has led the redistricting war and the Dem Party for all intents and purposes since 2024, and yet, in polling, she's crushing him for the 2028 nomination. Well, I don't know how I feel about his reason here. The reason is simple, and yet every single election, it is lost on largely white, rich, uber left-wing coastal fanatics who dominate corporate media, to my incessant frustration. He has no non-white support, and the Democratic nomination is 45% non-white. So he's saying that Kamala Harris is beating him because a large portion of the Democratic Party is non-white. And Kamala Harris is non-white? I'm not sure I buy that. I think it's almost like a conditioned response that like more people know Kamala Harris's name than Newsom, and that's why she comes up in the top in the poll. Do you really think it's going to be Newsom in 2028, though? Do you guys really think it's going to be Newsom? The situation in the Democrat Party. I sure do welcome our Californian president. You know, when they were talking about Hillary Clinton making a presidential run, because I don't think I really knew too much about her own political. You know, I didn't realize that they were kind of like a political power couple, and that she had always been into politics, sort of a thing. You know, I was always just like, now you're doing it. It's like it would be with Obama, right? If Obama's wife ran, you're just running off of Obama's name, because politics was never really something that I think she was super serious with, as far as I understand. But anyways, and it was like, man, if the Democrats nominate Hillary, like, that's going to be such a disaster for them. Like, I really don't think people like her. People, you know, there's no way this is going to happen that way. But it's like a slow motion train wreck. Like, you can see everything's already set up, and it's just check mark after check mark, or checkpoint after checkpoint. She's in the lead, and she becomes the nominee. Because man, when I look at Newsom, I think he would make such a terrible president. I feel like he is the worst aspects of the Democrat Party, because one, he is totally all in on all of the worst Democrat policies that have really just like not been working very well, right? Like that's one of the things that just drives me crazy is there's so many of these Democrat policies, especially at city levels, like in New York, rent control, things like that have just been, that are so objectively bad, and Democrats still love them, right? And he has a tendency to support those sorts of things, or the woke things, but then he's also like totally fake. Like he just it seems like everything that he's doing is part of some political ploy, you know? And so I think he would make such a terrible candidate. And I think he would be a very unlikable candidate too. I don't know. Democrats have a way of just, however bad their candidate looks, rehabilitating them in the media, right? As soon as they're picked, then everybody in media is like, oh, they're so great and all these great things he's done. It's so predictable, man. But even with all that, I'm still just watching this like just so skeptical. Like there's no way. Surely in the process, there's going to be some moderate come along like Josh Shapiro or something that like runs away with it. But right now, every indication that I'm getting is that it's going to be Newsom. He'll be voted in the same way as Kamala immediately with no. It could be. It is, isn't it? Just so. Those of you that are old enough, I mean, I think our audience is pretty old here. Don't you just feel like that the place that the Democrat Party has come to is really bizarre? Because when I was a kid, it was all activism all the time about the Iraq War and all these sorts of things. And they were really they were all about democracy, especially, and anti-establishment. And to see now the Democrat Party become more establishment than the Republicans ever were is so jarring for me. It just doesn't feel like the same party to me. And like, I hated the old Democrat Party, but the new Democrat Party is like dystopian, you know? just gets me back to like I really have given up on like they're gonna figure out policy and make big changes that really improve things. You know, like with healthcare, like I really hope that they do something with healthcare and make it a little bit better. But I have zero confidence that they're really gonna get a really good, fine working system, because people just don't understand complexity or the tools that you need to deal with complexity. And so they're always just going to make decisions that are not very good. Okay, Hassert is talking. If Trump pressures the Fed on rates, he'll just do the right thing. So he has been saying that, like, well, he thinks that rates need to be lower, but he's going to do what the data says and still be an independent Fed president. Okay. Well, it's been almost 10 minutes since the open. And I that wouldn't necessarily be like a, hey, they should be taking off on a second leg sort of a thing. But I just don't feel like I'm getting the signs that it's still going. Like when it's ready to make another leg, I would often see things like during the flat period, you're still seeing an imbalance in favor of market buys, or you still see a lot of icebergs in there, and you know, like signs that there are people quietly accumulating in that area. And I don't really feel like we've gotten any of that. There has been a little bit of a change in the spread. The yield curve flattened a little bit. But I don't think I'm gonna take the trade. I don't think that there's gonna be a second leg. I think that it's just gonna be noise from here out. Like that was the move, and that was it. I got a new beard balm, and this stuff smells much more strong. I feel like I'm in a wood shop. The trade would be buying 11.5 or 12 in the 10-year Treasury in the hopes that they make a second leg and touch the first standard deviation based on volatility for the day at 15. But we're just not getting the support in the flows for that right now. Let's see here. Kevin Hassert at the Wall Street Journal CEO Council is asked how rates should go. What we have today is recognize that like in the 90s, we are in a potentially extremely transformative time. You got to watch and make sure the inflation doesn't take off. Question, how much lower? You have to watch. There's plenty of room to cut rates. What would you do if Trump wanted you to cut rates and you didn't think it was the right thing to do? If inflation has gone from 2.5% to 4%, you can't cut rates then. Nick Timoros deleted that tweet and then reposted it. That's funny. Tomorrow's going to be a very interesting day. I'm probably going to be too busy. I'll have to watch it when I get home. So like there's probably one of your better opportunities to grab something at 12. If they go off, you're probably not going to get that one again. Are seeing some movement in the E-minis as Hassert is talking here, so I think we could be in for some volatility. That's probably a better trade at this point than that second leg. Although I don't know if he's really gonna say, like, I think that there's a good chance he could say something that could move the markets, but he's trying his best not to, right? Hassert, I was right to question those, saying there is no need to cut. He really was. Oh boy. It is final then, huh? Zelensky definitively shuts the door on Trump peace plan won't cede territory. Ukrainian President Vladimir Zelensky, while meeting with so-called coalition of the willing European leaders in London on Monday, definitively ruled out that his country will agree to cede territory as part of a peace deal. He specified that the question of territorial compromise is why he has not reached an agreement on Donald Trump's peace plan. There are visions of the U.S., Russia, and Ukraine, and we don't have a unified view on Donbass, Zelensky told Bloomberg. Zelensky, bruh. I'm very concerned for you. I think it's a good guy. And I'm not, this is like not a threat or anything like that. It's just like, I'm just like gaming it out in my head. How else does this end? Right? If you're going to stay in the war, you can't win the war. Russia's going to continue to take territory. So what are the outcomes from here? Because I really don't see how you get a peace plan without Ukraine ceding territory. So, option one, most likely, Russia just continues to fight. They take all of the territory that they want and then stop. There's never any peace deal, and Ukraine loses way more people, and you get stuck with like a never-ending war sort of a thing. Option two, something happens to Zelensky, you get a different leader in that then signs a peace deal. I just don't like those options. Those scenarios. Do you am I wrong? Do you guys see another way through that? I really don't think that Russia is going to, like, really, can you imagine? Like, the whole thing, they come in, they take over these areas that they say have ethnic Russians in them. And then they're like, oh, you know, okay, it's okay. We can give that territory back up. You know, we just, like, ground and basically completely destroyed an entire generation of people. But we're just going to give it back now. I just don't see them doing that. I wonder if the Trump forums are saying anything about this. Oh, yep, actually there is. President Trump confirms Vladimir Zelensky has refused to even read their peace proposal. Does he want peace or not read it? A lot of people are dying, so it would be really good if he read it. Yeah, here's what we was talking about yesterday. Nick Fuentes' sudden mainstream visibility reflects a coordinated illusion driven by synchronized amplification networks, anonymous booster accounts, and foreign engagement farms. According to who? New report from NCRI. Interesting. Oh man. I am not going to talk about any of this stuff on stream, but if you want some entertainment, go on to the Trump forums and read them argue about Nick Fuentes. My oh my. They're getting into it. But no, what do they have to say about Zelensky here? No. I tell you what, man. Sometimes the things that I hear from Trump supporters, because to some extent it's like that, that's kind of my side of the aisle, right? But sometimes I see the comments from people and I just face palm so hard. I'm starting to think Ukraine would be much better off under Putin than they are now under Zelensky. That is such that it seems like such a unhinged thing to say. I'm disappointed. No one seems to be removing him from power either, almost as if everyone wants this war to continue forever. I do kind of think that the European Union would be okay with this war just continuing forever. Just as long as it's a resource drain on Russia. But that's most of the comments seem along those lines. But I'm just saying that I do kind of think, like, I from the stories that I saw that came through, it does seem to me like European leaders didn't like it and they told Zelensky to not take the deal. Like if European leaders were saying, well, this is probably the best that we're going to get, you should take a look at it seriously, I think he would have at least read it, It was a little bit weird to me the way that the news headlines on that one came out, because again, he was supposed to, like, the deal was supposed to be Thanksgiving, and then that came and went and nobody said anything, right? And then it was a whole nother week. And now we're finally hearing, oh, for sure, he didn't even read the proposal. Okay. Week and a half later, after the deadline. Okay. Wow, Wikipedia earned $184 million in 2025 and spent $3.4 million on hosting? Well, then where does all that money go? They have 700 employees. That doesn't sound right to me, to be honest. Oh, I don't think that they make money. I think that money was all donated. What about every wiki page that has a please pay us or we will shut down tomorrow? Yeah, no. When they say that they earned 184 million, I don't know. Well, actually, is there a link here? It looked like, yeah, they did not post a link in this thread. It's in a tech influencer subreddit. So, but they're just they're just commenting on it and they're not referring to a news story. So I don't know where they're getting that. But I would assume that that 184 million means that they raised 184 million. Now, if they raised 184 million, part of that could be, well, you want to have money for multiple years so that they don't have to keep begging you every year. But 184 compared to 3.4 for hosting the website, that's a huge gap. It's a huge gap. And they have 700 employees. I do kind of wonder. I always thought, well, you know, I'm just kind of realizing I don't know what I'm talking about, right? I always thought that it was like a few dozen people. I'm really shocked to find out that Wikimedia has 700 employees. What? Wow. Are they using all that money? I don't know, but I think it's worth looking into. Is that worth me looking into? Maybe. I think about it. That is interesting to me, though. Like the company I started working for has about 1,000 employees. So 700 is a pretty big organization. And the company is like, you know, so much of that is sales and things like that. You shouldn't need any of that for Wikimedia. Hey, that really does not add up to me. Oh, here's a report. Cash and cash equivalents, 72 million. Contributions receivable, 1 million. Investments, 213 million. Restricted cash, right of use asset, property and equipment. Prepaid expenses, liabilities. Accounts payable, 4 million. Accrued expenses, 7 million. Deferred revenue, 1 million. Total liabilities, 14 million. Well, that's not matching up with any of the numbers that person was saying. Because this is saying that their total assets total 310 million. Oh, actually, that is what was his number? 184 million. No, that does not add up. So I think that number that they gave is just complete nonsense. Operating expenses, salaries and benefits, 114,000. Boards and grants, 28 million. Sorry, the salaries and benefits was 114 million. I don't know, man. That organization sounds a little bit heavy for what they're doing. Are you long? I do not have a position. I was leaning towards making a short, but when I wasn't getting the signs and the flow that I wanted, I said, okay, it's not going to happen, and I didn't take a trade. So that's what we do is I come in, I'm going to have a expectation for what I think the imbalance in the flows are going to be. And if I see supporting evidence for that in the actual flows, then I'll take a trade. And today, I wasn't really expecting a huge imbalance. There was a little bit of a move up, so I thought, okay, maybe there is something and we're going to see a second leg. As time went on, we saw that the evidence for that in the flows wasn't there, so I didn't take anything. And sure enough, last 30 minutes, it's just been dead. So now tomorrow is probably going to be a different story. I think there's going to be some interesting moves in the morning. Although those are going to be speculative plays. I don't know if those are ones that I can really make a play off of. And then you get the Fed meeting, and that's going to be just crazy, crazy. This meeting in particular, I think, is going to be pretty crazy. Like, I know I might have a tendency to think like the next Fed meeting is like the biggest Fed meeting ever. Well, this isn't the biggest ever, but I think that this one would be pretty big. And December, have you noticed? I mean, it wouldn't be the first time. There's been a couple of December Fed meetings that ended up being like way more crazy than we thought. December is always when Powell ends up doing something crazy. Like, they'll probably still cut, but like, he might say something crazy hawkish tomorrow. Like, oh, well, I think that we need to not rule out the possibility that we need to increase rates in the future. Right? Then they have the market. Man, it was when was it? I think it was 2018. 2018. December comes along, and it was like one of the most, in terms of like the market pricing, because usually the market pricing like really consolidates in one direction. And in this case, it hadn't. But we still expected Powell to hold off because he was raising interest rates, and the market was going really, really poorly that fall. And then so they expected him to hold off in December, and he raised rates. And the whole rest of the month, all through the holidays, because normally it's just completely dead during the holidays, but all through the holidays, it was just crazy, insane selling the whole time. And then in January, they were like, okay, that was the wrong thing to do. And then the market completely recovered, and it was the best buy the dip I've ever seen. Like there's probably been better, like in terms of like the amount of a buy the dip, but like in terms of, it was just like 1 month of downside and then it was all up after that. One of the best I've ever seen. If he says good morning, it's all over, all in short. I really do think, Big Toasty, I really think that it is going to be a hawkish cut. Like, my prediction, and I would say this is not a prediction I'm willing to put money on, but my prediction is that they cut, but that this speech is hawkish. But maybe I will be completely wrong. Maybe something changed and he also agrees we have some concerns about the labor market, and he completely changes his tone this meeting. But I really doubt it. I think he's going to say the same thing he did in the last meeting. And the market didn't like what he said in the last meeting, so they're not going to like it when he says it tomorrow. What's funny is that almost isn't. Oh, you're totally right. The market is not informationally efficient, and the robots react to every single little thing that he says, and you'll see a little bit of movement off of it, and it's crazy. Oh, okay, so I thought we didn't have. We had JOLTS. JOLTS job openings 7.67 million versus the expected 7.11 million, and higher than the previous month of 7.22. That's gonna hurt the treasuries for sure. Well, I'm going to give it like 2 minutes and then it should get going. How did I miss? I feel really bad that I missed that JOLTS was on the calendar. I should have seen that. And I checked the calendar. I didn't see it. All I saw was the 10-year note. Well, 7.67 million. That is a much better change than, like, I kind of thought I would think, sure, 7.11 seems low because I actually think the job openings did increase from the last report. But 7.67 is probably higher than I expected. At the same time, a lot of those have to be not real, right? I think a lot of those are not real. So, how low could that take us though? 04, well, yeah, I think 04.5 is, yeah, I think I'd take that right there. If I wasn't, you know, like just about to leave, maybe I would take it. The issue is you don't know if it's going to come back first, but 04.5 I think would be a good target on that. That's where the volatility says. Well, I'll leave you guys with it. Maybe you're able to make something of it. But I could see another 10,000 contracts coming out. Oh wait, are they're going to touch it before I go? Almost. No, not quite. GG. Hey, thank you guys. Make sure well, I mean, it's too late now, but thank you for all you that clicked the like button. See you tomorrow. Stay excellent, team.